Okay, welcome back, guys. It is a great Tuesday, February 17th, and the stock market's been open for a while. It's just past 3 p.m. Eastern Time, and recording this quick video to kind of look at the market and see where we are and exactly what is happening today. Um, yeah, it's been a crazy day, and it's not over yet. We still have about less than 1 hour left, and then tomorrow is going to be a whole new session, of course, but we don't care. We're long-term investors. We are not swing traders or day traders here. So here's the view. Right into it, we're just going to cover the markets and where we are and some other news. So as you can see, like the market opened pretty normal here with a nice run up and then just collapsed right into uh, the low of the day right here at 10:30 where the algos tend to take control algorithms. But an incredible rally again from 11:30 all the way back up to the high of the day here. Well, one of the highs of the day. Then it chopped and we ranged sideways over lunch and down. Then finally back up here for a high of the day right here at 629. So crazy day, not over yet. We're now chopping down. We'll probably finish flat, to be honest. I can see us finishing flat around this range to 627. But that's the market we're in. It's the market we're looking at. Days will chop sideways like this until we kind of know what's going to happen. Right now, the bears and bulls are definitely fighting over which direction the market will go. You can sort of see this, see them sort of play down, 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 chop, chop, up. So down, chop, chop. Probably see an up day eventually, right? And then it'll chop down again. Our indicators here on the daily chart, we'll see that we have currently got a still in a sell. Haven't printed the blue diamond for a buy yet, so there's no point in being too early here. And then likewise on the weekly chart for the view, you're seeing a purple diamond indicating bears in control. Selling is happening, and I haven't got a blueprint yet. Blueprint might come eventually. We don't. This is where we're in this gap here. Like we could go down lower, we could go higher. You just never know. You have to look at all the information and give it your guess, your best guess, right? So my best guess is we're going to chop and go down a little bit, mainly because we're back into the fear territory. We had a bit of a pullback today. Um, and the market's just hovering here. Main headline is of course AI. We're just not sure what AI is doing. Didn't help that Ray Dalio, right, put out a massive article saying that we're all screwed. The market's going to implode, and we're going to see one of the biggest corrections in history. Basically, it's a very long essay he put up. Like we're in stage 6 of global macroeconomic changes coming, where people are de-dollarizing their countries and moving to gold, moving to other assets. We'll see wars pop up. We're in stage 6 of that uncertainty paradigm that he kind of walks through. So, but yeah, yet again, his actual equity portfolio is, look at that, invested in some really good companies that we all love, right? The SPY, of course, IVV, and then NVDA, CRM, Salesforce, Google, Microsoft, Amazon, Adobe, and then GE, right? So, like, speaking out of two sides of the mouth, really, who knows how he's hedged or how he's set that portfolio up, but he's holding stuff to be bearish. He's betting on the US stock market to do very, very well. Another news, UK unemployment hits 5.2, the highest since 2020. So this is what I mean by like we got to pay attention to all data, and we can sort of see that like things could get ugly for a few months before it gets better. It also is a midterm year, so there's just things that you really have to like keep in top of mind. Like things are not safe yet, and I don't know about you guys, but like I personally like the idea of holding cash. So midterm year is what we said is partly causing that sell-off, and unemployment is rising across the UK. I'm going to make a list of things that we talk about. US white collar hiring is extremely weak. This is another one here. So AI is basically more or less taking those jobs. It might not be, of course, but it might just be that hiring is weak because the underlying economy, the jobs economy is weak, the labor market is weak. But this is not good. When you see the ratio is half since 2021 and it's even lower than the 2020 pandemic bottom, that indicates like be careful. Like we need to just be careful the next few months if you are day trading or swing trading. If you're a long-term investor, you can dollar cost average in, not financial advice, of course. I'll back up and say this is not financial advice, just a guy that likes to invest his money and help people too, if I can, with some generic advice. But you can see like this just to me says be careful. Don't do anything stupid. Don't go all in on leverage or margin or calls. You just don't know what sort of year we could have. We could have another 2022 when things get bad, right? So you want to make sure you're protecting your capital and you're doing what's right for you and for your family. Just an example of like Chinese robots as well. This came out yesterday. A year or two ago, you would not have seen this. Um, Robots were not this advanced. They were falling over each other and barely walking in the straight line. So in 1 year, we already have robots doing backflips, coordinated somersaults. My first thought when I saw this was military. My first thought was military will militarize these robots, and instead of seeing humans run through a battlefield and fight with guns and tanks or whatever, I'm thinking like World War II, but modern fighters too. You're gonna see robots. You're gonna see optimized robots for war. Like it's inevitable. You have to realize this level of technology. They'll be working on this stuff. Can run faster, can jump higher, stronger, more lethal. Doesn't get hurt, so to speak, or have to sleep. This thing will be 24/7 on the go, powered somehow by some sort of battery or fuel. I don't know, some top secret fuel system, and it could be remote automated, or it could just be set on a mission with no like way to stop it. Anyway, so just blabbing a little bit, but my first thought was I saw a military use case here, and we'll see what happens in the future. Another news, SOFI. I'm always going to talk about SOFI because I do hold SOFI stock, and look at this, like again, it doesn't take a genius. Their stock, I'll spell out for anyone who maybe is watching this video for the first time and not into SoFi, but SoFi's stock price has relatively remained flat. It came out of this bear market here, is what I'll call it. It got to an all-time high, then it just fell back down. So all-time high and then down, which is totally unjustified. Their total revenues before provision for credit losses is going up and up and up. Their CAGR is 41% there. SoFi is not a bad company. Its fundamentals are phenomenal. I can pull up another chart and we can look at that real quick. SoFi, we can look at whatever we want. Let's look at their ratios, I guess. This could be a good one. Their stock price to their market cap. We can have a lot of fun with this. Market cap, what do we get? It's going to be the same. That doesn't help me. Price to sales, price to earnings. See what we get here. So when I look at that, I see that they're still not, the market's not evaluating them correctly. They're getting unfairly punished. But my point is, they are not being treated and rewarded correctly. And I'm thinking Noto is now coming out to say they're going to do their own publications, their own analysis, because they can't trust the actual market, other bankers and other Wall Street analysts to give them a fair rating, because this is not where it should be. I mean, quarter over quarter, killing it. They're caught up in the whole software AI, dilemma, which is fine. It's fine to be in that argument, but that won't hold it on forever. You will see eventually a snapback to reality, and SoFi will break out of this since September the 25th. This little bit of a downwards chop it's been in right here with our indicators, and I think it will be higher. Might be mid-year, might be end of the year, but I'm predicting back up here in the 34 range. I was hoping it would hold, this 20 this weekly and the 21. Got below it, so I'm a little bit annoyed that it might drop down to this level again, but I hope it doesn't. But you never know what this market's going to do. On the monthly, likewise, it's just too young to really see any data, but moving the right way. And then the daily, we're looking kind of miserable too, just hovering in this dead man area here. But SoFi deserves to be higher. Not fair how it's been ratioed off by Mr. Market. This is Ray Dell's article. I will link it to y'all in the chat below this video. So click on the links below and you'll see it. It's very long, but he's basically saying we're in stage 6 of a new world. Paradigm shifts, expect wars, the big cycle, external order disorder, international law equals right as might, and he thinks that, well, he's basically surmising there could be military wars, more of them happening as we kind of like elbow ourselves across the um, the world for who's going to be the next big superpower to lead this new age, right? So Schiller's not on board, and wouldn't really waste my time on that. And then Michael Burry, of course, Michael Burry and Amit fighting is just so funny. Michael Burry's he's just yeah, he's crazy, right? But let's look at Palantir real quick. That's an important one. I love Palantir. Hold a few shots stocks. I would like to buy more. This may be a good price point to buy. I mean, it's still grotesquely speaking like overvalued. Um, so I don't know if really you want to put capital there right away. Everyone needs to do their own, research, of course. But Palantir still trades at, I want to get the number correctly, PE of 208, which is really, really high, of course. And their EV sales and their EBITDA is high too. Revenues 4.4 billion, market cap is 313 billion. So, like the revenue to market cap is it's not in my opinion, it's not in alignment. Yes, they're growing like crazy. They could keep going. It's just so much. It's so hard to know for certain, right? The past year, they're up technically, what, from that $83 to 133, so they're still up, but this has been quite a reversal since November the 3rd on Palantir. But again, very controversial company, loved by a lot of folks, hated by a lot of folks. Definitely more arguments breaking out over the news to like try and drag them down a little bit. Price target is 189, so there definitely is upside potential. Cash, net debt, all looks good. So yeah, I'm a fan of Palantir. My buy zone for them is probably below, I would say in the weekly chart, below that line there, that 55 to like 90, $96. That could be a really, really good buy zone. I'm not by no means ever a professional at calling this sort of stuff. I just look at the charts and I want to see what's obvious to me. I see this as a really good range to buy in right there. And then potentially where we're hitting this resistance right now, this 124 fighting here, you could see a gap fill down list range technically. That looks like it could be a possibility. But I mean, Palantir at this price, $46 would be insane. You'd be crazy not to bet the house and farm at that point, as long as the fundamentals stay true. So big fan of Palantir, keep an eye on it. Other ones today that we are watching closely, you've your energy plays like Cypher, IREN, of course, was down a little bit. Now it's up a little bit. Today's just a crazy, crazy day. I'll go back to this daily chart on the 1 minute. Had a high today of 42, 43-ish, and now it's getting lower again. So it's a bit of a sell-off to finish the day for the next 40 minutes. But overall, the market is just doing its thing. There's opportunities everywhere if you buy and hold for a long time, like Oscar, SOFI, $13, $19 respectively. Other opportunities I see would be your software plays. I made a list of those. SaaS companies are being hit hard. Take your pick. I mean, Adobe, ServiceNow, Salesforce, AppLovin, all these companies could could have a fantastic finish to the year once this AI software argument is over with. Some may go bust, but I don't think all of them will. Um, Most of them are working on their own AI to survive and to grow and to evolve. I've used Adobe and Salesforce before professionally, and I know they're not perfect, they're annoying, but they get the job done. A lot of companies are married to them, so it'll be very hard to change those moats, so to speak, because it's hard to like get your data really out of Salesforce and to break free of Adobe's massive network of products. So I think those two will survive. There's definitely opportunity here. I today did buy the IGV. It's the iShares Expanded Tech Software ETF. This is a really good ETF. Highly recommend it if you want exposure to the SaaS market. This is what you want to buy because it holds a bunch of software companies. So you're going to get 4%, 5% exposure to these companies on the upside. And I think that's where you're going to see a fantastic, opportunity to add this one to your portfolio. I just hit a yawn there. Your rare earth companies, they're selling off. Bit of a not a nice day for rare earths. I need to add more to this list, but I tend to look at these three mostly. Yeah, I would expect something to do with Greenland's going to happen this week, and you'll see that go back up like 65, 70 bucks. This is the way it works. It drops and we get news and we rip higher all over again. But yeah, that's your update, guys. Mag 7 is holding fast to a bit of a drop in Tesla today. Google, I don't know about Google. It's had that massive reevaluation last year because of Warren Buffett and Berkshire Hathaway. It might be a good buy here for the long term. I just don't know. It's you got to just take your time thinking about these things because I mean 2021 to 2022, 2023, like it went nowhere. My gosh, like it was just stuck here for years. Finally, it had this movement here. So before I buy something, I tend to look at how it's performed and the narrative with AI and everything. This to me has been a fantastic month over month increase. So I wouldn't be surprised if you see a little bit of sideways movement for maybe a couple to several months if we get an unlucky 2022 bear market. But yeah, that's what we'll see. We're keeping an eye on it. I am buying things to hold them for multiple years, at least 1 year. I'm not day trading or swing trading here. Perhaps I'll take more calculated swing trades on stocks I think are oversold and maybe will rebound. Like Path, for example, is very oversold. It's right down in this territory here. Actually, could get lower. Forgive me, I could get much lower. Um, Maybe it was Apple I was thinking about. But yeah, there's a bunch of them for sure. Software companies are very oversold. SOFI is down pretty low here on a key indicator. This is our custom made Astral, and that is telling me right now that we are seeing a huge opportunity to watch SoFi print a blue diamond to run higher eventually. And Shopify is a good one too. Had a huge sell off after a really good earnings report. I would not be surprised to see SoFi swing higher. So yeah, keep an eye on these things, guys. Hope this helps. I'll try and do more deep dives, more videos every day, or at least 3 per week. We'll keep them coming. If you like the video, please drop me a like or a subscription below and give it a follow. Thank you. Bye.